Assalamualaikum warahmatullahi wabarakatuh. Well, hello people. I'm Renita from Adifi, an accounting student class F. In this opportunity, I would like to explain you about statement of cash flows. If you watched my previous video, I am explaining about accounting principle 2 by Elizabeth A. Minbiole. So, talking about statement of cash flows, I'm going to explain you about statement of cash flow sections that is include operating activities, investing activities, financing activities, and cash reconciliations. And then the second, preparing the statement of cash flow include direct method and indirect method. So let's begin. What is statement of cash flow? The financial statement that reports activity in cash and cash equivalents for a period of time is called the statement of cash flows. Cash management is an important function for every business, knowing that cash is expected to be received and what cash is required for payments is critical information in determining whether a company has exceed cash for investment or will need additional cash to meet operating needs, such as paying its employees or its suppliers. Statement of cash flow sections. The statement of cash flow has four main sections. They are used to classify the types of cash inflows and outflows during the period, and the fourth reconciliate the total cash balance from the beginning to the end of the period. The first sections we talk about operating activity. These sections tells the reader whether or not the company generated cash from its day-to-day operations. And then investing activities. Investing activities, which reflects how the company is using cash to grow or maintain its business. These sections report the activity in long-term asset accounts, such as land, building, equipment, intangible assets, and investment. Financing activity. Financing activities report the activity in the long-term liability and stockholders' equity accounts. And then cash reconciliation. Cash reconciliation begins with a net change in cash that is the total of the operating, investing, and financing activities section. The beginning of the period cash balance is added to the net change to obtain the ending cash balance. The ending cash balance is the same as cash on the balance sheet of the end of the period. Okay. Section 2, we talk about preparing the statement of cash flow. There are two acceptable methods to reporting a statement of cash flow. That is, direct and indirect method. Direct method. Using the direct method requires cash relative to day-to-day business operation to be identified by the type of activity. For example, cash collected from customer, cash paid to employees, cash paid to suppliers, cash paid to building operation, cash for interest, and cash for tax. And then indirect method. Only the Financial Accounting Standard Board favors the direct method for preparing the statement of cash flow. Most companies don't use the direct method, opting instead of the indirect method because it's easier to prepare and provides less detailed information to the competitors. Okay, that's all about my explanation. For lesson more, I do apologize. And then so I hope you can understand my explanation and you can learn more about cash flow. So, thank you for watching. Assalamualaikum warahmatullahi wabarakatuh.